Hey everybody, hey traders, Chris Pulver here. It is 9:15 Eastern Time on Sunday, October 6th. Thought I'd do a little video for a weekly outlook to see where we're at. This week we have employment data for the U.S. on Thursday with CPI that's going to be month over month, year over year, as well as the core CPI numbers. And we're sitting here looking at the S&P just shy of the all-time highs. We've had some lackluster movement the last couple of weeks. The last volatility event we had was FOMC when we had FOMC got all exciting and then faded back down. Change the color here. So FOMC up and then down, and then a big gap to the upside, very little direction, just this slow, melty upside. And then we've stalled 1, 2, 3, 4 highs now, have not been able to break all-time highs on the S&P. Doesn't mean this is getting toppy or anything. I just think that if I look at this area, basically, I'm pretty comfortable saying that this market, if we break higher, we can go higher. If we break lower, there's plenty of potential to the downside to have more of a correction. So I'm just going to wait and see how this kind of week plays out. Slow and choppy, slow and steady, that's totally fine. If the market doesn't take on any type of crazy risk on Monday, I know there's a lot of geopolitical tensions going on right now with Israel, Hezbollah, missiles being fired, and it's not good. Oil prices have been all over the place, so we'll get to all that in a moment, just spot checking these markets. But we essentially have, a lot of indecision here near the all-time highs. You go to the Nasdaq, same type of thing. We have since FOMC, we've had two, lackluster weeks. It's been pretty choppy for the most part, failing to make recent highs, and obviously the Nasdaq is not at all-time highs. So S&P near the all-time highs, Nasdaq still quite a ways off of that. Coming into earnings season, which we do kick off this week with financials on Friday. The other ones were noted. I think I picked out Domino's Pizza and Delta Airlines this week on Thursday. And then financials on Friday. Then we get into Mag 7. So you'll be looking at, your Apples and Googles and Amazons and Teslas and Microsofts and all that stuff to see if that's enough to get this market to continue its market breadth, continue to widen out and perform well. If consensus is positive, beating estimates on top and bottoms for earnings per shares and revenue, maybe the market justifies going higher. We also have election drama coming in the background. So within about 30 days or so, it's November 5th. It's time to vote. Who's going to be the president? Does that impact the markets at all? All these things are going to be digested here in the next few weeks. So I could see the market being very hesitant to go anywhere. The Dow is still sitting here in a lot of indecision. You can see how I've doctored up the charts. I mean, we have basically 2 to 3 weeks of indecision on the Qs, kind of fighting back and forth between this recent pullback we had in September and this gap fill that's just shy of the all-time highs. Is the Nasdaq able to get back above 493 and able to get back to 503? Maybe, but probably not without earnings being a big catalyst to push this thing higher. We go to the Dow. We haven't made a high in the Dow since the 27th of September, and that was a pretty nice rejection. If you look at the Russell, same type of thing. Since FOMC, we have not made a higher high in the Russell. Now we're still making higher lows. It's just pretty evident that we have highs, lows, higher lows, and this market is just taking its time, trying to coil, giving us some typical like indecision, and then we look to see if this market can in fact justify going higher. Now, the reason I have these really simple indicators is that's what I'm really waiting for. I mean, sitting at these highs, I would love to get a pullback or a dip. Here's the 50, here's the 100, here's the 200. I do think there's potential risk to the downside. I'm not crazy bearish, but I do have some hedges in the futures market. So my micro S&P futures or my micro Nasdaq futures, if we have a pullback into these moving averages, I will be taking some profit on those long puts that I have in my futures options positions, just to mitigate some of the downturn and some of the drawdown. I also have some spreads on the SPY and the Qs that I place almost every week. And point of that is, if they're out far enough, doesn't really impact. But if I get assigned anything, I typically take the assignment, work my cost basis down, and add additional SPY stock to my portfolio. So long story short, I mean, we're sitting here near the all-time highs, near but quite a bit different. I mean, the divergence between the S&P and the Nasdaq recently, divergence between the Nasdaq, the Russell as well. I mean, the SPY and the Dow are the closest to the all-time highs. The Nasdaq, the Russell are the farthest from the all-time highs. Russell being the farthest because that hasn't made all-time high since 2022. There's just a lot to unpack. There's a lot to have the market digest to justify how can we go higher. It's not just going to happen magically. But we're not seeing, even the threats in the Middle East right now are not enough to turn these markets south. Now, the Fed, with having a good jobs number last week for non-farm payroll, the markets blew out expectations, and we had like over 100,000 better than expected. The unemployment rate went down as well to 4.1. The average earnings was up as well. All these things were looking pretty good for. Hey, the labor market stabilized. Now it really is kind of I've been using this as an analogy, but if we had a seesaw, okay, and this year the market was only focused with the Fed on inflation. Okay, so let's say this right here was inflation and this was employment. So I'll put, I guess I'll put I right here. So inflation was the most important thing that has the most weight from the Fed. Employment wasn't even concerns, or it wasn't a concern until July. And all of a sudden this completely flipped, where then we had employment news that was really important, and then employment became the focus. And inflation, we were kind of declaring victory, like inflation's trending in the right direction, we're going the right way, and employment is now the focus. Well, because of the non-farm numbers last week, I think that is switched again, and now the market is, if we're lucky, the market's kind of equal, like, okay, both jobs and inflation will be important, but realistically, I think inflation is going to be now the focus. And so with the news coming out on Thursday, the CPI print is expected to show 2.3 year over year, which is another 0.2% lower than the 2.5 that printed last month. So if that is the case, that's fine. But with oil prices going up the way that they have in the last week or two, look at oil. Okay. Now on the daily time frame, oil is still, I mean, this has been a big move in oil in a very short amount of time. So that little squeeze was up as high as 13.5%, has faded a little bit to around 11.33%. This is a big deal. If oil can get back above, let's say $77 to $80, if we get back above $80, how much of a squeeze will we see on oil? Right now, this is not necessarily a bull market. We came off of holding support and getting a bit of a squeeze, but I wouldn't be surprised if we have a downturn in oil and then we really see what this support is made of. Because if we come back to, $67 or $65 again and then stabilize here, perhaps this does actually hold and build into something where another squeeze is likely. But there have been talks that Saudi Arabia wants to push oil prices down. That higher production is going to happen. If global demand is picking up, there's going to be an increase in supply. The threat to the Middle East is that this conflict will disrupt oil supply, which thus drives prices higher when there's lack of supply. So we don't know how bad that's going to get. We don't know how much that's going to escalate. I hope it doesn't turn into an official war or conflict. Not that it isn't already something, but oil prices are highly sensitive. So that's a big move. We're still from the technical side. I mean, we're below the 200 moving average, which arguably you'd say, okay, if this is a buy zone, we'd want to see price back above it, and it's not there yet. So even with a 11 to 13% rally, it's still technically in a sell zone, and we're making lower highs in oil, and this could continue. We could have lower highs and equal lows, lower highs and equal lows. My concern with a pattern like that is if this breaks lower, this is going lower. So this floor better hold, or else oil prices are going to get a lot trickier and a lot uglier. Okay. But if it holds and stabilizes here at $60, $65, or let's say $65 to $67, then perhaps we still have this range that seems to be like all is well, no major disruptions to oil. But man, it has been a very, very sensitive, and now with the geopolitical risk as well, oil's tricky, and oil prices to the upside will likely trigger higher inflation readings. That's not a good thing. So anyway, I don't think the U.S. and the Fed especially can have this victory lap on inflation yet. I think it's something they have to monitor to make sure that they will do their best to extinguish inflation, because it is a killer for the U.S. economy to have, 3% inflation. It's far worse than what the numbers actually show. What people are paying for groceries, what people are paying for insurance, what people are paying for cars and luxuries, or just cost of living in general, things are more expensive. Even though we've trended from 9% to 3%, that means inflation is still higher. Okay, we certainly don't have deflation when it comes to our everyday cost of living. So anyway, but what else do we have? As we have the indexes sitting here stalling for the last couple of weeks, here's the Dow struggling to make highs. It's been pretty choppy price action. The Russell has been slightly faded lower the last couple of weeks. Going to the volatility index, it has been a little bit higher. So the volatility index has been a little higher. We're at 19 change. So Elevated volatility. I'm not short volatility. I'm not long volatility. I think this will remain somewhat elevated even into the election. So even if this gets a little bit more coiled, do we have an election event that triggers some type of higher volatility, or do we see that we're going to have higher volatility until the election and things are just all over the place for the month of October until the election is clear? I don't know, but I'm head on a swivel for the most part with my trading. I'm taking some stabs. I'm looking further out. I'm just trying to get through the next like 60 to 90 days without over trading. I mean, because I think if the dust settles, the market's going to do whatever it can to try to grind higher. But if we have a pullback or a dip, I'm looking to position for those dips to then want to buy more, want to position myself, pull back to the 50 period, pull back to the 100 period. I really like getting some more exposure in those areas. This bull market to me is very much in check and safe. Even if we came all the way back down to test this 200 moving average, to me, that's an opportunity to buy. Now, whether or not we get all the way back to the highs doesn't really matter. If I can turn this area into a buying opportunity, and let's say we get halfway back, that's fine. That's enough to generate some income. So I'm looking for opportunities to buy some dips. Now, things we haven't had a chance to buy dips on. Gold. Take a look at this. Okay, gold. We're fading a little bit. Same thing on my moving averages. I'd love to see gold roll over a little bit. The dollar has been stronger as well. The dollar's had a nice little surge here for about 4 or 5 trading days in a row. This is enough so that, I mean, again, still below the 200 moving average. I still think the dollar is looking to get faded harder to the downside. If the stock market's going to go higher, I still think the dollar gets faded back down to equal lows or possibly even fresh lows late this year or into Q1. Now, if that's not the case and we go up here on the dollar, a pullback, but this creates a higher low and the dollar rips again, I don't see how the stock market can go higher with a stronger dollar. I think if the dollar gets bid around this 102 handle and we go to a higher high, we're going to see a correction in the stock market to possibly that 3 to 5, maybe even 10% level again. So dollar certainly matters moving forward. Stock market, I think, correlates, inversely with the dollar. The dollar gets stronger. I'm expecting a weaker stock market across the board. We'll see what that looks like. The Fed, if they cut and they proceed with another 25 or 25 in November, December, that's going to matter as well. Okay, gold, back to this. If the dollar remains bid and continues to go higher, gold has barely budged. Okay. I mean, look at this. Gold has barely moved and the dollar has ripped for 4 or 5 days in a row of trading. So there's clearly a lot of bid maintaining in gold. But I think all it takes is one decent push in gold to the downside. I'm interested again in establishing some positions, looking for higher highs in gold. Now, that's pretty shallow. That's pretty shallow. That's definitely a deeper pullback. Decent structure, decent structure, decent structure. So I may not see the 200 moving average hit, but if we have something that kind of rolls over gold, finds a 50 period, that'd be pretty nice to get reestablished somewhere around like 2,500 to buy the dip on gold. See if we can make a run maybe later this year into next year at 3,000 or so. Silver, same type of thing. Silver's breaking some good structure. What I'd like to see silver do is maintain this posture and just keep grinding higher to get to my measure move around 35.88. If we see silver, as long as it's a slow retreat, I think this is still a buy the dip opportunity to get up to a higher high. The one concern I would have on silver is if the market's going to treat this like it's resistance and this is support, that we have more of a sideways move on silver. Now, I would still be buying silver around $26 because that's past resistance, future support, future support. I still like 26 a lot on silver. But like I said, based on this recent structure, if we just hang out here, drift a little bit higher, that could work out pretty nicely. I'd like to compare the performance of gold versus silver. And if this is trending lower, that shows me that silver may catch a bid and actually get the upper hand, at least in the interim. We've got some good structure that goes back here into 2022 with gold and silver, not really having any major breakouts. But if this is the best that gold's going to do, the best that silver's going to do, right now this could continue to push a little bit lower and allow silver, XAG, to get the upper hand. So hopefully silver will continue to shine a little bit. Take a look at Bitcoin. We're trading right now 63,872. Looks like a nice accumulation zone in Bitcoin. I still like higher highs. If we have reasonable pullbacks, I'm still looking to buy more, in the low 50s. I just haven't committed to, over buying. I mean, I have positions in BITO, IBIT, Bitcoin itself, Bitcoin futures for right now, and I think that's pretty decent exposure. I've got about a 3 to 5% allocation of Bitcoin in my portfolio that I'm going to try to stick with and just kind of dollar cost average in as needed. Work some options positions on BITO, and at some point the CFTC will clear options on IBIT, and I'll start to get more active with that with the ETF that I bought. So I did buy the IBIT ETF. That's BlackRock's, and I'll continue to use that. And whenever the options are approved, it may not be anytime soon, but hopefully in the next, maybe 3 to 6 months, if there's options on this, I'll have the ability to, sell some calls and generate some income and lower my cost basis. Because, I did a measure move here. If Bitcoin, if we go to 100K, based on that percentage move, I've got it measured out here on IBIT to hit roughly $57. So if we're trading at 35, we get to 57. Return wise, that's pretty decent. That's a 61% upside. If we get to Bitcoin at 63, hit the 100K, I've got a symmetry move out to around 102. Let's get to this price right at 100K. You're looking at about 57%. So right around like 55 to 60% upside if we hit the 100K mark. Based on symmetry, though, I don't know if we're going to actually, I mean, if we put in a low here in August and that's the low, then my symmetry move actually goes a little bit higher. And now we're projecting a swing trade towards 107, which again, from 100K to 106, 107,000 makes a big difference. But I'm still interested in this being a potential 3-wave. If this is all wave 1, this is all wave 2. 3-wave is pretty big. 4-wave is a pause, and 5-wave, we could still get some pretty big measurements out here. And this, of course, would be a pretty interesting spot to measure this thing all the way out towards 168. As a trader, I'm probably going to be peeling off some profits if we hit 160 to 165. I haven't seen Bitcoin. I mean, when I was taking profits on Bitcoin back in 2022, a lot of it was based on this divergence. So I had taken some profits here when we had higher, a lot of divergence there. I went to cash, started to reposition and rebuild. Same thing here, testing the same highs, showed divergence, went to cash, and then started to rebuild, additional rebuilds, and then that's all been great since 2022. It's been nice to rebuild, but now I'm wondering, of course, if we can get to all-time highs and then some, and we start another kind of big bull market at Bitcoin. So whether you're in it or not, it's something I'm paying attention to. I mean, essentially, my portfolio has had very little upside with Bitcoin's kind of accumulation here. It's obviously done well since my 2022 positions, but as far as 2024 as a whole, hasn't done a lot, which means I'm just sitting and waiting. But if it becomes something that obviously goes up to 100K, well, my exposure with BITO or IBIT and other assets that correlate, MicroStrategy, same thing. I mean, I'm trading MicroStrategy with a bunch of income plays down here, right? I'd be happy to own some shares of MicroStrategy, but give me something to pull back. I want to see, 120 again. I want to see 115, 120, 125. I've got a bunch of income trades here. When we had that drop in August, I was just selling a bunch of premium MicroStrategy because the implied volatility is so good that there's, $2 credit, $7 credit, ratio spreads, all sorts of fancy stuff there. But really just give me some income on a stock that trades a lot like Bitcoin. IBIT is an ETF that's supposed to trade like Bitcoin. BITO is not trading like Bitcoin, but I certainly hope that it will start to reflect and resemble that if Bitcoin's going higher, that BITO will start to wake up and start to catch up and correlate. So anyway, I feel like I spent a lot of time on Bitcoin, but that's one of my portfolio pieces right now that hasn't really performed. China has been doing very well for me the last couple of weeks. I'm still riding these out with a bit more momentum. I did close out of some of my JD positions. I had some shares that I closed out last week. We're sitting here. I'm looking at prices right now, making some fresh highs. I closed out very near the highs last week, around 46 and change. I bought the shares at 32.50. I did a bunch of option trades earlier in the year, a diagonal spread here, long calls, more diagonal spreads, bought the shares. And so I'm not saying that we can't go up higher, but for the amount of profits that were generated here on just a couple of positions, this is a 1, 2, 3. In case there's a pullback, I'm just trying to take some profit and be a little bit more protective. If I can consider getting back in, but my horizon on some of these trades is not super long term. So if these continue to rip higher, I do have some shares of KWeb. I do have some shares of FXI. I do have some shares of Baidu and Baba. And so if they continue to rip higher, anytime I'm hitting some measure moves, I'm going to be protecting some profit. So that's what's going on with my China positions. It's been a year in the making. They're paying out a ridiculous amount right now, and I'm just trying to get out of the way and don't sacrifice or choke off the profits too quickly. And then the indexes, I'm just watching to see if we have some downside potential. I'm positioning for some very cost-effective ways. Example, I did an ES hedge this last week where if we get below this level, we revisit this FOMC low, it would pay me about $175 a contract, and my risk is about $70 a contract. So it's a 2 and change to 1, so risk reward is fine. It's favorable. I can afford to take the small loss. I can build this out to just kind of take some income stabs at the downside, or maybe some quick hedges if I'm right. But I'm not trying to overhedge. I'm not trying to overposition. I think this week there's maybe enough of a catalyst on Thursday, Friday, earnings season kicking off as well, that the market's going to shake itself loose a little bit. And hopefully that is the case, because I wouldn't mind seeing some direction. But that being said, if we have no direction, that's actually fine. Because day to day and week to week, if we have no direction and we just stay here, and we just want to chop around, well, there's obviously a lot of premiums to collect, and you can, sell puts and sell calls, or I guess you'd sell calls and sell puts. But if price goes nowhere, that's fine too. So I just think that we are having a hard time justifying higher highs right now without the market getting behind. Fed's going to continue to be accommodative. All things look good for the U.S. economy. Inflation data falls in line this week with a better print than expected for year over year. Market gets excited, lifting animal spirits. Yes, there's stimulus coming out of China, and essentially cutting rates for the Fed was a bit more stimulus related too. This is a good thing, but all these were also priced in. Not the China stuff, but the US was essentially priced in for the Fed's going to cut. And now that they are cutting, now that they have cut, okay, what's next? I think the market is needing to see a positive earnings season with an election that's going to basically yield more gridlock in Congress, as opposed to all Republicans, all Democrats. I think the policy shift would be the biggest threat to the markets, because if you have sweeping policies from the Democrats or sweeping policies from Republicans, the market's not going to like that. Yes, both sides are going to spend money. Fiscal side is going to be important because we're going to spend money. We're probably going to drive the debts higher in the U.S., and that's going to happen as long as it happens until it has to be restructured. But anyway, so going into this week, what to look forward to, what to expect. We've got some chop and play the last couple of weeks. Expect there to be some indecision. If we have a catalyst with Thursday, we have some earnings season with financials on Friday. Market might start to give us some direction. We haven't made any fresh highs. We haven't made any fresh lows for a couple of weeks now. And that's just what I'm watching. If we break highs, do we melt up? If we break lows, do we quickly make some lower lows? I think that's probably the direction I would look, is if we break lows, and we break lows with some velocity, that the lows can be a little bit more scary and violent. If we break highs, we just want to see if these highs continue to melt up. So it could be the slow grind to the upside, or it could be the, crazy fast, 2, 3, 4% dip to the downside, and see if the market is interested in buying at any major, technical spots, which that's why I have that simple 50, 100, and 200 moving average. Because whether it's the indexes, or whether it's gold, whether it's Bitcoin, even oil for that matter, I think that's a pretty simple way to just look at my charts day to day and find some levels that I'm interested in trading. So that being said, I'll let you go for Sunday. Let's have a great week of trading, and I'll see you out there in the markets. Thanks. Bye.